Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be talking about the VWAP. Now, if you're not sure what the VWAP is, it's the Volume Weighted Average Price, VWAP, VWAP. And you'll see it on every chart that I have. It's one of my favorite indicators that I use on basically everything. It's this dashed black line here. And really all it is just looking at a calculation by adding up the dollars traded for every transaction, multiplied by the number of shares traded, of course, and then dividing by the total shares traded for the day. So it's literally the average volume of the day. That's where, if you take all of the trades at every price and all of the volume at every price and divided it by itself, that's where the average is. So that's why you don't see it moving very frequently, and if there is a big bump in volume, something goes crazy, you'll see it juke a little bit like that, where it just goes boop, and then kind of continues on its merry way. It's not a very big moving type of indicator. Sometimes if there's a whole lot of volume, it will. If you're breaking out to all-time highs on record volume, something like that would have it go a little bit different. But really all it is for me, more of just kind of a directional bias. Very similar to a moving average cluster or the Ichimoku cloud. It's one of those things that you can look at and say, yeah, we're above it, it's bullish, done, easy peasy, right? Nice and easy kind of at a glance type of viewpoint. Now, this does have a lot of different uses as well. One of my favorite ones is utilizing the VWAP on the just as a level of support or resistance. Coming back to that area, it usually does find a decent amount of support or resistance, but keep in mind, it is a volume-weighted average. So don't think of it as, oh, well, this level right here, that's where it's got to bounce. No, not necessarily. More so, it's kind of a zone. Now, when the market's not doing much and it's range bound, you generally don't see it hold that much respect to it. You have to look at it in a different way. When a market is in a range, you have the volume weighted average where? Pretty much smack in the middle. So instead of trading it as a level of support or resistance, you're looking at using it as a mean reversion. So as the market gets further and further and further away from that VWAP, you're looking for the market to eventually make its way back to it, because that's where all of the volume weighted average is. And on a range day, well, you expect it to come back inside the range. So on PSTG, this is a great example of a non-trending day where it's anticipated to come back, right? So we have a little bit of back and forth on the open, starts kind of rallying away, but then comes back down towards the VWAP. No response at all, a little bit of a bounce, I guess, but then it went hammering through it. Well, now we're in a full-blown range. We made a new high, new low, new high, new low. It's probably going to come back up to the highs. Is it going to go all the way up to a new high of day? Maybe, maybe not, but chances are it's going to come back to the VWAP for a mean reversion. So you're looking for a fade down here for the market to come back up towards that area of interest. Now, when we're looking at a trending environment, little bit of a different story. A trending environment is something where you can utilize it a lot easier as a level of support or resistance if the market comes down to it. So here we have MYGN, and this was a relatively strong trend out of the gates. Nice rally up, paused out for a little while, came back, tapped VWAP, double tap, and went flying higher. That's a trending type of environment. You can see the difference. Look at the response that it had compared to the one that we just looked at. On PSTG, it bounced for maybe 3 minutes and then just kind of gave up. Here, as soon as it went underneath it, it popped right back up again and would not let it go underneath it. It tried it again, failed, and went flying back up. That's your clue that the market is probably going to the upside, and this is a trending environment with VWAP support. So a couple different ways you can kind of break down the way that you want to trade it, but really my favorite type of use for it is simply with a strong trending environment as a pullback zone, or as a mean reversion in a range-bound environment, or simply just at a glance saying, hey, we're above it, we're bullish, easy enough, right? So when it comes to the VWAP, again, there's a million different ways to use it, just like any other indicator, and using an indicator by itself, never recommended. Always good to combine it with several other things, whether it's factors from price action, candlesticks, stochastics, whatever your favorite bunch of methods are. But utilizing it with other types of mentality and really just looking to use it in the direction of what the trend is. And if there isn't a trend, it's still technically a trend. It's just a non-existent one. You're looking for mean reversions. With trend, you're looking to use it as a pullback area of support or resistance. Now, a little caveat before we wrap the video up. One thing that is very interesting about the VWAP is it can give you a lot of clues. Now, one thing that does happen very frequently, and I didn't see an example of it today, but a lot of times you'll see this on pump and dump stocks. Those really cheap garbage companies that are really just getting pumped that day. You'll see them pre-market go absolutely bonkers to the upside, and then they start pulling back. And we all know it, right? Those pump and dump stocks usually end up collapsing at some point. Might be today, it might be in a week from now. But you'll see the VWAP crawling up along with it, right? And it's crawling up along with it, and it shows some support and gets a little bit of a bounce. One thing to always keep your eye on when you're looking, especially at sub $10 stocks, especially if they're on the pump and dump list, you know, those $3 stocks that are up 700%, those are the ones that you really want to pay more attention to in this type of movement. Because what will eventually happen is when the trend is over and the pumpers are now turning into dumpers, it ends up breaking down through the VWAP, and a classic test of a VWAP as resistance will happen, and that's usually the final pullback that it has for the rest of the day. Very interesting little caveat to the VWAP. And something else to keep in mind as well is pre-market, the VWAP gives you the volume weight, right? It gives you the average price. And if you're coming into a stock, let's say as an example, that is down, it had bad earnings and it's down massively, but it's been rallying since that bottom. Price might be above the VWAP, right? You might see it do something like this. It's kind of grinding its way down. It ends up like this. Well, price is above the VWAP at the open. There might be something wrong with the continuation move to the downside, provided price stays above that. That could be a pretty big clue that something might be a little bit wrong with the downside, and the sell side might be over. Something to keep in mind as well. Hopefully you found that interesting, though. The VWAP is a phenomenal indicator. I use it on every chart that I have. It's on all of them. So definitely something that I use very frequently. Well, actually all the time. But as always, if you have any questions about it, feel free to send me an email, jbrink@slingshotfutures.com. Do me a favor, underneath the video, click on the subscribe button, as well as to the right of that, click on the notification bell icon so you're notified every time one of these videos goes live. We usually launch a video every day. And yeah, you don't want to miss anything important or interesting, something you can add to your tool belt. So that's going to do it for this one. Hopefully you found it useful, interesting, maybe something you'll want to take a look at and add to your charts and see if you like it. Outside of that, enjoy the rest of the day. I hope you had a fantastic trading day today, and we'll see you all tomorrow.